Imagine the world without oil. It's a daunting thought. But what if I told you that OPEC shift is making this possibility more plausible? The global oil trade is changing in ways that will impact the US dollar, gold prices, and your wallet. In this video, we'll break down the why behind OPEC move, how it affects gold's rise, and what it means for your future. From energy geopolitics to precious metal markets, we'll explore it all. Think about the ripple effects. What if you could invest in a new era of energy? Ever wondered why oil prices have been on a roller coaster ride? Find out here. Here's the thing, folks. The global oil trade is changing, and it's got everyone from economists to investors taking notice. But where did this shift come from? Well, let me give you a little background. OPEC, or the Organization of the Petroleum Exporting Countries, has been the dominant player in the oil market for decades. And over time, they've started to question the traditional model of high oil prices and low production levels. Sound familiar? They're asking themselves, what if we could produce more oil without depleting our resources? Think about it that way. Keyword, oil shift, length. 100. Think of OPEC like a big team effort. They are the top oil-producing countries. Now, imagine they're shifting their focus from selling oil for dollars to selling it for a different currency called gold. Here's the thing, when countries switch to a new reserve currency, it can cause a ripple effect on the global economy. It's like if all your friends suddenly started using a different type of money. You need to adapt, right? Same with gold. When OPEC starts storing more oil in dollars for gold, it's like they're investing in a different store of value, and that can make gold more valuable. So what's the big deal about OPEC oil shift and gold's rise? Here's the thing, most people think OPEC decisions directly impact oil prices, but that's not entirely accurate. What if I told you that OPEC true power lies in their ability to influence the global energy market through supply management, not just price manipulation? That means they can control how much oil is available on the market, which has a ripple effect on currencies like the US dollar and precious metals like gold. Think about it. When OPEC adjusts its output, it's not just about higher or lower prices, it's about shifting the global economic landscape. So let's dive deeper into OPEC oil shift and gold's rise. The mechanics behind it are pretty fascinating. Here's the thing, when OPEC countries like Saudi Arabia and Russia produce more oil, they're essentially flooding the global market with more crude. This increases supply, which tends to put downward pressure on prices. Now, most people miss that gold prices actually tend to rise during times of low oil prices. Sound familiar? It's because when oil is cheap, it makes other commodities like oil-based products cheaper too, and that boosts demand for precious metals like gold. Think about it this way, when you're at a gas station and the pump says $2.50, you might buy gas more often, but if someone's selling gold coins on the side, those prices are going to stay steady. The OPEC oil shift is actually a key driver of the gold market, and I'm here to break it down for you. Think about oil and gold. Say, Venezuela's economy was booming back in the early 2000s. Oil prices were through the roof, and everyone thought it was a good time to invest. But then, OPEC started producing less oil. Iran got sanctions. Venezuela lost its oil fields. The price of oil plummeted, leaving many investors broke. Meanwhile, gold prices started rising as people got scared of inflation and currency devaluation. Sound familiar? It's like the world was watching a reverse experiment on the impact of geopolitics on markets. And here's where it gets interesting. What if we told you this is just the tip of the iceberg? So what's driving OPEC oil shift? The answer lies in the global economy. Most people focus on US demand and supply. But here's the thing. Successful investors know that true market power comes from other countries like China and India. Think about it this way: if these emerging markets start using more oil, their imports will skyrocket, putting pressure on U.S. oil producers. Sound familiar? It's not just about supply and demand, it's about global economic shifts. And here's where it gets interesting. What if a stronger US dollar isn't as strong as we think? Let's take the example of Venezuela. You might recall the economic crisis that plagued the country a few years ago. The result was hyperinflation and widespread shortages. But what happened next is key to understanding OPEC oil shift. As the US imposed sanctions, Venezuela became increasingly dependent on foreign oil imports. This created an opportunity for other countries to step in and fill the gap. Sound familiar? It's like a ripple effect where one country's crisis becomes another's gain. Now here's what most people miss. This trend is playing out globally, from Africa to Asia. By the way, if you want to go deeper on this topic, I've linked some resources in the description below, including Personal Capital, which I personally recommend. Here's the thing: when it comes to OPEC oil shift and gold's rise, there are some common pitfalls that people fall into. First, people overthink it. They get caught up in complex theories and forget about the simple fact: oil prices can be volatile. That's why it's easy to get swept up in short-term fluctuations and make impulsive decisions. Sound familiar? Another mistake is not considering the broader market. People focus too much on gold or oil, but what about the currency that backs them? The US dollar, for example. It's like trying to predict a stock without understanding its underlying value. And here's where it gets interesting: most people don't take into account the potential impact of OPEC shift on the global economy. What if I told you that's a recipe for disaster? So what does that mean for you? All right, let's dive into some practical tips that'll help you navigate OPEC oil shift and gold's rise. First, start tracking your energy expenses to see if they are increasing or decreasing. This will give you a clear picture of whether the oil price changes are affecting your wallet. Next, consider diversifying your investment portfolio by allocating a portion to gold or other commodities. Don't be afraid to ask your financial advisor about their strategies for managing risk in uncertain markets. And finally, keep an eye on inflation rates. They could give you valuable clues about what's next for the economy. Oil rise, oil shifts, and gold's rise. What's next? Think about it this way. With OPEC oil shift, the global energy landscape is undergoing a significant transformation. As oil production increases in regions like Africa and Australia, the dominance of Middle Eastern producers will wane. But what does that mean for gold? Well, as we've discussed earlier, increased oil production often leads to lower crude prices, which in turn can weaken the US dollar. That's bad news for gold investors. However, if you're looking ahead 5-10 years, a stronger US dollar could lead to higher interest rates and a shift towards safe haven assets like gold. Sound familiar? So, let's recap the main points. OPEC oil shift is changing global dynamics, impacting the US dollar and gold. We've learned that Russia's actions are forcing a reduction in crude oil supply, driving up prices and strengthening the US dollar. At the same time, this shift has made gold more attractive as an alternative store of value. Now, think about it this way: what happens when global trade becomes more complex? The gold price tends to rise. Sound familiar? Ever wondered why? What if I told you that gold's price movements are closely tied to the oil market? Well, now we know the connection. So what does that mean for you? Invest in yourself with a deeper understanding of these markets. Subscribe to our channel for more economic insights and analysis.